오늘 2026년 2월 24일 화요일 금융시장 결과 분석. Today, we're really seeing a tale of two markets in Asia. It's fascinating. On one hand, you have a market that is just soaring, riding this incredible wave of an AI revolution. But on the other, a major market is getting caught in some serious geopolitical crosswinds.
And I mean, look at this. The contrast could not be starker. Over here, we've got South Korea's KOSPI index, which jumped a really impressive 2.11% today. And then you have Hong Kong's Hang Seng index, which tumbled 1.82%. I mean, they went in completely opposite directions. It's night and day.
So this brings us to the big question we're tackling today. How does this happen? How can two major, deeply connected Asian economies have such wildly different days? What are the powerful forces pulling them apart?
Okay, so here's how we're going to break it all down. First, we'll dig into Korea's incredible AI-fueled rally. Then, we'll look at the geopolitical storm clouds over Hong Kong. After that, we'll check out what the data is forecasting for the next few weeks, and we'll wrap it all up with a quant-based framework for navigating this kind of market.
All right, let's get right into it. Section 2, Korea's AI-powered ascent. We're going to unpack this massive surge and figure out exactly why the Korean market is hitting these incredible highs.
So the real engine behind all this optimism, it boils down to one just staggering number. $32.7 billion. That was Samsung Electronics' operating profit for 2025. This isn't just some abstract hype, you guys. This is the massive, tangible result of the AI supercycle actually happening right now.
And it wasn't just one thing. It was really a perfect storm of good news. Obviously, you had those record-breaking profits from the AI boom. But on top of that, mass production started for the next-generation HBM4 memory. That's the super-fast memory that AI chips desperately need, which really locks in Korea's tech leadership. Then you add a favorable U.S. court ruling that settled some trade worries and a stable interest rate policy, and, well, you've got a full-on green light for the market. Now, this leads to a really cool economic idea called cycle synchrony. Stick with me here. The basic idea is that different massive economic cycles, like, say, the roughly 9-year cycle for semiconductors and a much longer 18-year cycle for global cash flow, can actually peak at the exact same time. And that's a brilliant way to understand what's happening right now. It's like these huge waves are all cresting together, creating this incredibly powerful push upwards for the Korean market.
Okay, now let's flip the coin and look at the other side of this story. Section 3, Hong Kong's geopolitical headwinds. We need to analyze the pressure that's pulling the Hang Seng in the completely opposite direction. So what's going on in Hong Kong? Well, it's really a mix of pressures coming from all sides. You've got rising trade tensions between China and Japan, which just creates a ton of uncertainty in the region. At the same time, a lot of investors globally are starting to take profits on big tech stocks. And then you get these company-specific shocks like CK Hutchinson losing its port rights in Panama, which really spooked investors. This chart gives us a pretty clear statistical snapshot of the risk here. It's based on a model that runs thousands of what-if scenarios to figure out what's most likely to happen next. And what it's telling us is that while the market is probably going to stay in this choppy adjustment phase for a bit, there's a very real 38% chance of a sharp decline. A number that high is absolutely something that makes investors take a step back.
All right, so that's the diagnosis of what happened today. Now, for Section 4, let's look ahead. What are our models projecting for the next couple of months?
Okay, here are the numbers. The forecast suggests the KOSPI is going to keep on climbing, maybe even hitting 6,380 by the end of March. But here's what's really interesting. Our model sees a potential for a pretty solid rebound in Hong Kong, with the Hang Seng possibly bouncing back to 28,500. This hints that the current pain might be temporary, with a strong recovery possible over the next month.
But of course, these forecasts aren't written in stone. They really hinge on two huge events coming up. For the whole AI story, every single eye is on NVIDIA's upcoming earnings report. And for both Hong Kong and mainland China, the big 2 sessions policy meetings are the main event. That's the catalyst that could either kickstart this rebound or, change the whole story again.
All right, on to our final section, a framework for quant strategy. Now, I want to walk you through a way of thinking about this market systematically. And I have to say, this is purely for educational purposes, to show a methodical approach. It is not investment advice.
So, a sample strategy based on our analysis might look something like this. The thinking here is to have a lot of exposure, 60%, to that really strong trend in Korean semiconductors.
You'd balance that with some mainland Chinese value stocks that might get a boost from new policies, and notice the smaller hedged position in Hong Kong tech. That's to manage the volatility we talked about while keeping some cash on the sidelines ready to go.
A systematic approach like this usually follows a few core rules. First, you follow the momentum. You ride the trend. Simple. Second, you manage your risk. When volatility models start flashing warning signs, you pull back a bit. And third, you can use clever strategies like pair trading. That basically means you bet on one market to do better than another, like buying into the Shanghai index while betting against the Hang Seng to profit from the exact kind of split we saw today.
So, if you take away just one single idea from all of this, let it be this. It's the simple foundational principle behind this whole trend. As artificial intelligence gets bigger and more powerful, the demand for the advanced semiconductors that make it all possible just keeps growing with it. It's that simple.
And that really leaves us with the big, fascinating question. We've got these two massive forces, this technological tidal wave of AI and the shifting, unpredictable landscape of geopolitics, colliding in real time. Which one is going to win out? Which force will ultimately define the future of Asia's markets? Well, that's the story we'll all be watching unfold.